Global rally fading, boosting recovery in dollar demand. Wall Street stocks finished mixed on Tuesday while registering fresh all-time highs amid persisting optimism over the economic recovery. Also, investors continued to assess the prospects for more stimulus from Washington. The Dow Jones Industrial Average edged up 0.2%, the broad-based S&P 500 declined 0.1%, while the tech-rich Nasdaq Composite Index slid 0.3%. Among individual stocks, Palantir Technologies plunged by nearly 13% after the software company reported a fourth quarter loss of $148.3 million, while Apple stocks finished 1.61% lower overnight following reports that Nissan said it was not working with the tech giant on autonomous driving technology. Asian stocks were mostly lower on Wednesday as profit-taking continued during the session. Japan's benchmark Nikkei 225 dipped 0.58% even as vaccinations began in the country. South Korea's Kospi dropped nearly 1% and Australia's S&P ASX 200 slipped 0.46%. Hong Kong's Hang Seng gained 1.10% as the index returned after long holidays. Chinese markets, however, remained closed for the holidays. In Europe, stocks closed lower on Wednesday as investors monitored housing bond yields in the United States. The Pan-European Stock 600 ended the day down 0.7%, with most sectors sliding into negative territory. On the bright side, according to the latest reports, Pfizer and BioNTech are to supply the EU with an additional 200 million extra vaccine doses this year. Of note, Pfizer said that 75 million of those doses are to be supplied in the second quarter, with the EU having an option to request supply of another 100 million doses on top of that. Meanwhile, Italy's new Prime Minister and former European Central Bank chief, Mario Draghi, said that its first priority is to fight the coronavirus pandemic. He also added that the government will pass reforms and tackle emergencies. On the data front, the UK Consumer Prices Index came in at plus 0.7% in January when compared to plus 0.6% booked in December, while beating expectations of a plus 0.5% print. The core CPI arrived at 1.4% plus year-on-year versus plus 1.4% booked in November, surpassing the consensus forecast of plus 1.3%. In the U.S., inflation grew 5.3% in January from the prior month on a seasonally adjusted basis, the largest monthly increase since June. December's data was revised lower to a 1% decline from an initial 0.7% drop. U.S. stocks pulled back from record highs Wednesday morning as investors weighed whether strong retail sales indicate the lack of congressional urgency around passing the next stimulus bill. The S&P 500 and Dow Jones were down 0.54% and 0.31% respectively, while the Nasdaq Composite edged 0.91% lower overnight. Minutes from the January Fed meeting showed that the officials see the economy far from the central bank's goals. As for the Fed's asset purchase program and interest rate policy, the minutes indicated little chance for a change anytime soon. As for currencies, the dollar rose nearly across the board on Wednesday. The U.S. currency proceeded to recover following the recent sell-off, receiving a boost from the resurgent risk aversion on the global financial markets. As such, the euro and USD plunged to a 1.5-week low around 1.2025 while staying below 1.2050 early on Thursday. The pound sterling US dollar was marginally lower, slightly off fresh long-term highs registered in the 1.3950 area earlier this week. The US dollar Japanese yen peaked at 106.20 but failed to confirm a break above 106.00 and thus trimmed gains while deriving support from the 200 DMA today at 105.50. Meanwhile, oil prices continued to derive support from major supply disruption in the south of the United States this week caused by a historic winter storm in Texas. Furthermore, the American Petroleum Institute reported a draw in crude oil inventories of 5.8 million barrels for the week ending February 12th versus a drop of 2.4 million barrels expected. On the negative side, the API reported a build in gasoline inventories of 3.9 million barrels. Brent crude resumed the rally following the release, extending the ascent on Thursday. The futures exceeded the $65 handle for the first time since January 2020 to set fresh highs around $65.50 during the Asian session. Later today, the EIA weekly report could give the futures an extra boost if another contraction in crude oil inventories is confirmed officially. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.